If you work harder every year, but somehow feel poorer than before, this video will explain why. Not opinions, not motivation, history. Most people believe money is broken, that inflation is a mistake, that debt is temporary. But history tells a different story. Money isn't failing. It isn't broken. It is working, exactly as it was designed to work. Prices rise, wages fall behind, people work more hours, yet feel less secure. This didn't happen overnight. It happened slowly, so slowly, most people never noticed. To understand why, we have to go back to the very beginning. Thousands of years ago, money was simple. It was a tool for trade: gold, silver, grain. It helped people exchange value fairly. But as kingdoms grew and empires expanded, money slowly changed its purpose. It stopped measuring value and started measuring power. Rulers discovered something critical. If you control money, you don't need to control people. They will control themselves. Taxes were introduced. Debts were enforced. Currencies became centralized. From that moment on, money was no longer neutral. It became a system of obligation. Centuries later, banks perfected this design. They realized something revolutionary. Money didn't need to exist physically. It could be created through debt. Every loan created new money. Every repayment destroyed it. Debt became the foundation of the economy. Today, the system looks more advanced. Digital numbers, central banks, financial markets. But the core idea never changed. New money still enters the system through debt. And debt always demands more than it creates. This is why prices rise. This is why wages fall behind. And this is why working harder doesn't guarantee freedom. The system doesn't need stability. It needs participation. And as long as people keep working, borrowing, and consuming, the system continues to function. Ask yourself this: why does inflation never truly disappear? Why do prices rise even during crises? Because inflation is not a bug. It is a feature. When money is created through debt, there is always more owed than exists. Interest must be paid, but interest is never created. So the system requires growth, constant growth, more loans, more consumption, more pressure. Inflation quietly transfers value from savers to borrowers, from workers to asset owners. It rewards those closest to money creation and punishes those farthest from it. Most people never see it happening. They only feel it. Every system creates winners and losers. In a debt-based system, those who control credit decide the future. Banks don't lend money they already have. They create it. Governments borrow. Corporations borrow. Individuals borrow. And everyone pays interest. Risk is socialized. Profits are privatized. When the system expands, the top benefits first. When it collapses, the cost moves downward. Bailouts are invisible taxes, paid through inflation. And the public is told this is necessary. Necessary to save the system. Most people believe they are free. Free to choose. Free to work harder. But choices inside a system are not the same as freedom from it. You can change jobs, move cities, start businesses, but you still need money. and money still comes from debt. The system doesn't force obedience. It incentivizes it. Work more, borrow more, consume more. Those who refuse are excluded. This is not conspiracy. It is structure, and structures shape behavior. So the question becomes this: is there an exit? Can a system built on debt ever stop growing? History gives us an answer. Every debt-based system faces the same dilemma: grow forever or collapse. When growth slows, cracks begin to appear. Defaults increase, confidence fades, intervention follows. More money is created to fix problems caused by too much money. This buys time, not solutions. The exit was never meant to be collective. Systems do not change willingly. People adapt instead. Those who understand the rules play differently. They don't chase wages. They acquire assets. They don't save currency. They store value. They use debt carefully, not emotionally. Time becomes their ally, not their enemy. This is not about greed. It is about positioning. Understanding money changes behavior. Behavior changes outcomes. History doesn't reward effort alone. It rewards alignment. The system will not collapse tomorrow, and it will not save you either. It will continue, as it always has, quietly, relentlessly. Those who understand it will navigate it. Those who don't will feel betrayed by it. Money is not moral. It is mechanical. It does not care how hard you work, only where you stand. And once you see the structure, you cannot unsee it. This is not the end of the story. It is the beginning of awareness.